Ladies and gentlemen, airheads, that's our new name. That's what Brian came up with in Discord, and I think it's gonna stick. My name's Air. We're here for your 5th video. We're already to video number 5. Channel's only been out for a couple weeks now. Like I said, broke away from a larger channel. I'm a professional trader. I do this for my job. This is part of a series. If you are just finding us with this video, make sure you start at video number 1. The playlist is gonna be in the description below. So here we go. Video number 1 is the most important video in this entire series. I can't stress that enough. If you don't have the proper expectations on going into this, if you don't have the proper discipline going into this, and some best practices and some of the advice I give away in that video, you might as well not even attempt to do this because you are going to fail. So that is the most important video in the series. That's where you need to start. Second one, we walk through in kind of a basic setup of what indicators you should be using to start, to lay a foundation. We walk you through a trading view setup. The third video was on mastering liquidity in order books, laying a foundation, showing you a few programs that you can use, and then turning the keys over for you to explore further. Yesterday's video was on understanding CVD, delta, perps, and spots, giving you a few options, one of them being a free one with a free template that I give you, and then turning the keys over to you to explore further. Today's video is a juicy one. It's going to be packed full of information. We're going to be going over chart patterns. We're going to be talking about candlesticks and candlestick patterns, different types of candlesticks. We're going to be talking about trend lines today and trading trends and trading channels and how it can be used to become a master trader. So I appreciate you guys for watching. Make sure you like, comment, subscribe, turn on notifications, and then hop in Discord, discord.gg/Alpha Aere. The first 100 active members who join are going to be grandfathered into any type of pay gate I do in the future, meaning you get it for free for lifetime. Let's just hop right into the video. Understanding and identifying chart patterns, to which there are a lot of. This is just a small example of some of them. We're going to go over a lot of them here. Are integral to being a professional trader, to being a master trader. To master trading, you need to train your eyes to spot these things. So why is this important? Well, when a chart pattern is confirmed, there is a high probability that a certain price movement will occur in the near future. So a chart pattern is not able to predict with certainty a future price movement. So it's not 100% certain. However, the probability is high. So for example, a head and shoulders pattern has an 89% success rate and can quickly identify potential reversals. An inverse head and shoulders can predict reversals in the opposite direction. We'll cover all this. Double bottom, 88%, triple bottom, 87%, descending triangle, 87%, cup and handle, 95%, ascending triangle, 83%, bull flag, 85% during a bull market on an upswing. So my point here is, if you went to the casino with a 90% odds in your favor, I'd be living at the casino. I'd be there constantly, all the time. And this is why this is important. It's important to note that there are varying studies on this. Some of them don't give cup and handle a 95% success rate. Some of them give it a 75 or an 80% success rate. So when you hear me say this, I always say, plan for 70 to 80% success rate, but that also means that 20 or 30% of the time, it goes the other way. So if you're in a bull flag, right, 20 or 30% of the time, that's going to break down instead of what it should break probability-wise to the top side. So that should always be in the back of your mind, that more often than not, it's going to go in your favor, but occasionally it's not. So it's kind of a joke that as traders say, it's like, well, the price is either going to go up or down, right? It's kind of like a meme or a joke that we say, but the truth of the matter is that is true. It's going to go up or down. I mean, the only thing we know for certain is that the price is going to go to the right? And I say that because I see comments sometimes from inexperienced traders who say, well, dude, all you're saying is it's going to go up or down. And if that's all they hear when I'm doing TA, they are a lost soul and they just don't know better. So hopefully those people watch this video in this video series and it starts to click and make sense that trading is all about probabilities. You need to have a plan of action for both situations. And it'll make sense as we go through this series. So here's an example of what I was just talking about. So this particular study says head and shoulders top, 81% win rate, and then head and shoulders bottom, 90% win rate. So there's different studies, and then they all vary, but to a high degree of a success rate. It's also important to remember that trading is a formula. Trading is mathematics, right? So it's, you know, the expectations, best practices, setting up a trading plan, plus, you know, understanding how to work TradingView, plus mastering liquidity and order books, plus understanding CVD, delta, and pop spots and perps, plus understanding trend lines, understanding chart patterns, being able to identify them on all time frames, being able to understand trend lines, being able to understand candles and candlestick patterns, bullish spinning tops, for example. Now, I would say this is more important on larger time frames to figure out which way the market's going to go. Monthly closes, weekly closes, daily closes as well. But there's hammer, inverted hammer, dragon doji, bullish spinning top, tweezer tops. This is important to know as well. And we're going to cover this all in the video. But I just wanted to cement to you that this is all a math equation that equals a good trader at the end of it. So first thing we're going to discuss today are the chart patterns. You have reversal patterns and continuation patterns. Bullish flags, bearish flags, bullish pennant, bearish pennant. You have your bearish head and shoulders, bullish, so on and so forth. Now, there are more than just this. There are cup and handles and lots of other things. There's not enough time in an entire day to cover this extensively for you. I'm going to give you the basics, lay a foundation. I'm going to show you some real world examples on the charts. And then, like I have all these other videos, the keys are going to be put in your hands. It's up to you to start the car and drive away, right? It's like the old saying. I know it's just cliche, but you can lead a horse to water, you can't make him drink. I'm leading you to the water. You got to drink. And look, the good news is you do not need to know all this stuff overnight. This is going to be a process. It took me, realistically, a couple years before it just started to click and I could spot these things and I could throw down trend lines on the chart for support and resistance by just looking at it without even having to look at anything else. And then somehow magically the price hits it. Eventually your eyes are going to get trained. This is something that you need to start Googling, right? Figure out cheat sheets like this that you can utilize and draw on. Take a look at my bookmark bar right here. So financial, all the stuff related to Alpha Aere, different indicators, stuff that I'm going to look into, TA stuff, news stuff, behind the scenes, which is kind of empty right now, DeFi deck stuff. So I'm going to organize yourself, get folders, right? Right click it, add folder, et cetera, and then bookmark them, store them so you can quickly call on them when you need. So let's try to find a couple of these on the charts just to prove the point. So behind my big old head is your double top. There you go. Top, or this is also referred to as an M pattern. So you can find these all over the place. So here we go. There's your top, double top, reverse. Couldn't break through it. There's your top, double top, reverse. Pretty simple. Then you have your double bottoms, right? Which is the W pattern, right? W. So you had your rounded double bottom, blast to the top side. So you can find these anywhere. A falling wedge pattern. This is one of my favorites. So you get the big blast off to the top here. This is the recent run up that we had. All right, I'm just quickly drawing these just to prove a point, right? So this is your descending or falling wedge. More often than not, this breaks out to the upside. Sometimes you get that fake out breakout to the downside before the blast off. So this is how that works. Ascending wedges here, you can see it ascends to the top side, breaks to the downside. You remember the last bull run, right? You remember we talked about yesterday. So you had a double top. So, a lot of us got nervous there. Not only do we get nervous there, but we saw that the CVDs, like we talked about in the previous video with the CVDs and the deltas, how the price was going up on that double top, but the CVDs were going down. So the CVD was something like this, right? So the CVD had a top and then a lower top. So those two things coupled together flash a warning signal for us, traders who kind of were in the know. Like I said, I'm sloppily drawing these just to get points across here, and I don't take forever. But so this is that larger descending wedge that we just covered. So if I go to the daily chart and we zoom back in, you can see the descending wedge here. So you can find patterns within patterns as well. They show up on different time frames. So while the daily pattern was a descending wedge, you know, we saw some bullish movement with inside that wedge because of the double bottom, which brought us up to the top of the support, the resistance, the top of the trend. Bear and bull flags, you can spot these anywhere. There's your flag pull, there's your bearish flag, there's your dropout, right? Now, like I mentioned, they don't always play out. There's your bear flag. This one kind of did actually play out, but then it kind of shot to the top side. So on top of that, there's another flag here. This is a bull flag. Breaking down, shot up. This one shot way up. But they don't always work in your favor. Shoulder, head, and shoulders. Shoulder, head, shoulder, dump. That's typically how that works. See if we can find an inverse. Here's an inverse shoulder, head, and shoulders for you. Bullish, right? Shoulder, head, shoulder, pump to the top side. You've probably heard me say measured moves. How do you get measured moves? And again, I'm just drawing these quickly and sloppily for you guys just to get the point across. But for a shoulder, head, and shoulders, you kind of take it from the bottom head to where the shoulders meet. And then you're going to put it over the shoulder closest to where you are in the price action. So where the breakout would occur, right? And you can see we wrote up the entire measure move almost to the T. Now, typically I say, you know, you want to kind of target 60 to an 80% breakout. So 60 to 80% of this. So somewhere around here would have been your targeted. But more often than not, it's going to go right to the T. Now, the whole FTX downturn was just a giant cup and a handle. There's your cup. There's your handle. There's your breakout. Taking your measure move from from the bottom of the cup to kind of the top of the cup. I mean, look at that. Played out exactly how it should, right to the line. How do you take measured move of flags? Well, you draw your flag, right? And then you take the measured move from the impulse. So where it started to lose whatever previous structure you were in, which is this, right? So you take your measured move from the top of the impulse to the bottom, and typically I slant it if the price movement is slanted. And then you get your breakout right to where the price action began again. I mean, it's just, that's TA. I mean, look how it just plays out perfectly. Why does it work that way? I don't know, it just does. So chart patterns like this are an amazing indicator of future price direction of the market. They are not to be used as, hey, I'm going to enter here because I say a bear flag. If you see a bear flag like this, for example, your next move is to try to find an entry and try to find confluence, right? Where two rivers meet, where all your indicators come together and say, hey, we are in fact going down. Everything's pointing to the fact that we're going down. So now I have to find an entry. So finding entries, we're going to kind of build off of, it's really just the math, the equation, right? First video plus second video plus third video. It's putting all these together to build confluence and confidence in your trading. So let's park this for a second and talk trend lines now, since the two go hand in hand with each other. Every trader loves a good trend. Trend trading is the most fun. It's the most predictable. A trend line is just that. It is a line on a chart that signifies a trend. So going back to what we just talked about, this is that larger time frame trend. This is that descending wedge trend that we were in really for quite a while. We were in this trend from April 6th all the way to the 19th of June. So this was a 74-day trend. I made so much money here, it is ridiculous. And here's what I mean by that, right? So a trend starts when 2 points touch. A trend continues and gains strength when multiple points touch. So, for example, touch, 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 touch. There's your start of a trend, and you can see this trend carried on for weeks and weeks afterwards. I mean, this is a 4-hour chart. This is, like I said, 74 days or whatever it was. So, how do you trade these? Well, you take a long, you take a short. You take a long, You would have gotten out here because I would have hit your stop loss, right? You probably, maybe you didn't enter again and you waited since you were mid-channel, got back up here, you entered into a short again. Got down here, you entered into a short. It got up here, hit your stop loss, maybe you didn't trade this at all. And then here, you entered into a long again. You entered into a short again, right? You got out here because it hit your stop loss. You didn't do anything and hit this again, hit that trend line again. So what do? You enter into a short. You enter into a long. You probably got out here because it hit your stop loss, and then you got into a long again. You probably got out here because it hit your stop loss. It came back down, right? Maybe you entered here, but it went the other way, right? But guess what? Who freaking cares? You lost one trade out of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. That's a drop in the bucket compared to your winnings. And then what happens? It loses it. This was like that fake out breakout here. And then so it loses it. You probably don't enter here. At least I wouldn't until you get that retest and we break back into a channel. Guess what? I'm entering into a long again. And then eventually what happens? You break out how you should from this pattern, right? Probability wise, about an 80% breakout. And then you just are in all kinds of money. I mean, that was a 20% run up at a 5 times leverage. That is 100%. Congratulations, you just doubled your money. This all comes back to the first video: patience, discipline, and sticking to your trading plan. So we had 74 days of beautiful trading, of predictable trading. So when you enter into a long, right, or a short at the top here, just as an example, it comes down. Sometimes you get that fake out and then it comes up. So if it would have hit your stop loss, because you need to move your stop loss down with your trade, but you need to give yourself enough wiggle room in order to allow it for a pullback. And if it hits your stop loss, right, take that win. Because guess what? It's going to hit this trend line again. It did for 74 days. So if you get stomped out in the green, that's a win. Take what the market gives you. And then you enter it again when it gets up to that trend line. We had 74 days of a predictable market movement. As a trader, you can't ask for a better atmosphere to trade than that. Trend lines are drawn, and I get this question a lot. People ask me, do you draw it from wick to wick or from candle body to candle body? So do you include the wicks, right? So do you draw your trend lines only using wicks, or do you only use candle bodies? Well, the answer to that question is you use both. You want to be as close to both as you can. So you're going to have some that go through candle bodies and some that go through wicks, but you want it to be as close to the top as possible. What you want is for it to hit the most possible points. You want the most possible wick and candle bodies hit as you can. So let's take the most recent one, for example, that we were just in and we just lost. So we were in a $30,000 to a $31,000 range for a while. I mean, we were in it from about 22 days, 23 days, something like that, but about 3 weeks, we'll call it, from the 21st of June to the 14th of July. And if you include the most wicks and most candle bodies you can, it's 30,000 to 31,000. This was a decently, it wasn't great, but it was a decently traded range. I made a bunch of money here as well. So obviously you can see there's a whole bunch of touches on 30,000 here, a couple touches here, your trend starts. More confluence as this builds. So again, what do? You take a short, right? And you write it down as much as you can while moving your stop loss, right? And then you enter into a long. Then you enter and you do the same thing. You know, the price starts going up. You know, you put your stop loss there. Price goes up. You move your stop loss up there a little bit, right? It looks like it's going to break out. It doesn't. It starts turning and it retests that trend line, falls back in. You enter into a short. Same thing, right? Over and over and over and over and over. This one looks like it was going to break out. 31,500 liquidity lick, right? And then you're moving your stop loss up along the way, allowing yourself for enough repeat, it smashes your stop loss. This is where that discipline and patience comes in. You got to watch and wait to see what it's going to do. So it started to retest the channel. You started to flag out, right? Uh-oh, I better find an entry here. Let me enter in at the top of this trend line on the flag, because you make trend lines with flags, right? That's literally what the chart pattern is. So you got your, just quickly drawing this. There's your trend line. There's the top of the flag, the bottom of the flag. You want to typically enter in the top of the flag. and then boom, you made all that money all the way down. And if you would have held it like I did from the top up here, you would still be in it. I'm still in a short from the top of the market on a couple coins, Bitcoin included, BNB as well, a couple others. But my point is, that's how you get on the winning side of a trade and you get those big wins. So not only did you get a, possible breakout here, 10% breakout, right? But you made these small wins along the way, and those add up. So these trend lines, and typically what I do, so the top one is your resistance. So typically, me personally, I make that blue. I make the support resistance. So you never, and I repeat, never, starting off anyways, unless you see something else, but you shouldn't ever short support. You shouldn't ever long resistance. More often than not, as you see here, probability wise, we were in this for 22 days. Only one of those days did we shoot up from resistance. So you never long the top and you never short the bottom. On top of that, you need to pay attention to liquidity, right? You need to pay attention to what Bookmap is saying or whatever liquidity program you use. Well, I say that because we had these licks up to 31,500 a few times. That's how I personally knew that was probably going to be the top of the market. We tested it a few times. We weren't able to break through it. I don't know if it's still sitting there. There still is some liquidity at 31,500. But when we were in this range, 31,500 was solid. It looked like 30,000 does here, where 30,000 is going to be tough to crack through. So I knew that we're going to get some liquidity licks up there, but it's going to be tough to crack through. At some point, there's going to be enough momentum to do it. It's just not there right now. So you got to couple the two together, both your trend lines, and you got to be aware of where that liquidity is for potential liquidity licks. But that's how I knew. I treated 31,500 like I treated 69,000. This is currently the top of the market. I'm going to pull out. I got rid of I cashed out a bunch of money because I knew there was some downturn coming. I'll enter in again. I'll switch my tether to Bitcoin and hop back in. I'm still trading perps, don't worry. But that's how I treated this current top for a lot of reasons. I mean, macro, the economy. That's the Terra Luna collapse right there. That's going to be tough to break through that 31,500. It's going to be bullish when we do, though. But you need to couple everything we're learning together and be aware of where that liquidity is, and also be aware that the liquidity can change. We could have 30,000 all of a sudden disappear and move up to 30,500, making 30,500 a potential new level. So while you're trading these trend lines, you need to be aware of potential liquidity moves for potential breakouts to either way. Like I've been saying in Discord, really, since we lost this on the 17th of July, this is tough to trade. I don't recommend anyone trade this right now. I don't. And if you have influencers out there telling you to trade this stuff, you need to unfollow them. This is trash. This is garbage. This is whales out here shaking up the markets, trying to gobble up the minnows out there. So unless you absolutely know what you're doing, you should just sit out of this until we get a good range to form. So what you don't want to do is enter into the middle of a range, because it could go either way. It just can. It's not solid. What you want to do is wait, right? You want to wait for it to gobble up. So if we come down to 28,500, that's probably, potentially, unless the downward momentum is so strong, a good place to enter into a long. If we come up and hit 30,000, I can almost guarantee you we're not going to go through 30,000 as long as this thick liquidity sits there. Great place for a short. And look how the 28,500, boom, liquidity, and then the 30,000, boom, liquidity, lines up more often than not with trend lines. Not always, especially when you're in a descending wedge, because that liquidity is moving constantly to keep you in that descending wedge, but they line up perfectly. So it's just not a fun range yet, because we've only had really, since we've been in this, since we broke down, we've had a couple touches on the bottom, but only one touch on the top. So really, that's not even your current range right now. I would say it's something like 29,400. Is really the range that we're in right now, with a couple of weird liquidity grabs up and down. It's a tight, boring range. I don't recommend anyone trade this right now until we hit either 28.5 or 30,000, which is where your discipline and sticking to your plan comes into play. Use this time to hone your skills. Start TAing alts, because everything I'm showing you for all these videos works with alts. You do not have to always be in a trade. If you're going to be in a trade just to be in a trade, you're going to have a rough go at it. Practice, 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 practice. There's paper trading on TradingView. Use it. Play around with it. Just practice. It's not a good time to trade right now. If you must, use low leverage. Little bit of money that you're okay with losing. Go in with that expectations, and then sure, do what you want. But I would wait for it to range out or start hitting one of these liquidations when it's boring like this. Patience is going to pay off. Discipline is going to pay off. Wait for it to hit the low or the high, right? The 28.5 or the 30, and then make your move. If you don't do that and you lose, that's on you. So segueing us into stop losses, which trend lines can help you set. When you enter into a trade, you should probably always put a stop loss in there, typically a little bit greater than your final stop loss, maybe 10, 15%, whatever it is. That shouldn't be your actual stop loss, though. That's just to get the trade triggered and out. You should always use limit orders where possible as opposed to market orders. They're cheaper for you. My typical stop losses when I enter a position are going to be different than your stop losses when you enter a position. My stop losses are typically between 3 and 5% when I enter into a position, 3 and 5%. Now, those move up and down depending on how confident I am in my trade and the entry that I get. So when you enter into a trade, you should always enter into a trade with a stop loss, especially on more volatile coins, because those can liquidate you in a candle wick, some of them. I've seen some people trading some crazy coins, which I don't understand. I'd never trade them, but enter into it with a stop loss. And then here's how trend lines can help you figure out where your stop loss needs to be set. So this is where you take your trend line drawer, right up there, and then you go wick to wick as best as you can. And look at that, how that lines up pretty perfectly. So when you enter into a long position, you need to be, your stop loss needs to be behind this line. So if I enter into a long here, my stop loss needs to be above this wick to wick line, because we know we get wicks that go above that line. So same thing over here. Now this wasn't a great range to be in, but when you enter into a short, for example, let's go wick to wick, something like that. And as we start kind of seeing some other things form, you can draw more. You can draw it within there. Now this would be a pretty big stop loss, especially if you're using high leverage, because that's a 2% potential wick to the downside. So that'd be like let's just call it 3%. So you need to set a 15% stop loss and be okay with that going into the position. So let me say that again. So you have your normal trend, right? And then your stop loss trend, which is wick to wick. So you have to set your stop loss below this in order to enter into the trade. So that way, if you're 5% leverage on there, you need to have a 15% stop loss to enter into it. You don't have to, right? That's how I look at it personally. So I hope that makes sense. If it doesn't, let me know. So when I say if your trading account is not a winning account, if you haven't grown your money and by a considerable amount, you have zero business trading anything bigger than 5 times leverage. Why? If this is a 3% channel, and you're doing 20 times leverage, your stop loss needs to be 60%. That's a 60% loss. You're going to liquidate your account fast. You have zero, you're gambling, you're doing it wrong if you're using more than 5 times leverage, unless you're an experienced trader and your account, it has a high win rate and you have more money than you started with. If those things aren't true, stop. 5 times leverage is a lot of leverage. I always tell new traders, just use 1 times, right? Or 2 times. If you need that extra oomph, use 2 times. Learn first. Your goal right now is not Lambo. Your goal is to learn. Your expectations. You're not going to be a millionaire this year. You're just not, unless you already are. It's going to take some time. Don't burn yourself out. Don't get frustrated at first, because you're just going to have a bad time and then you're going to give up on this. I've seen it a million times. We know that the majority of traders don't win from watching the first video. The reason I'm talking about this leverage quickly again, because it is important. I'm showing you why by using trend lines where your stop loss needs to be set. A 60% stop loss is insane. 15% manageable, right? 2 or 3% stop loss using 1 times leverage, or 6% stop loss, right? Yeah, using 2 times leverage, manageable. Now that we got a basic understanding of patterns and trend lines, let's look at some alts, or a alt, and show you that it can be used on different time frames. It can be used on any coin, on any stock, on any forex, on the dollar, on futures, on anything. Gold. Let's take the most recent Caspa breakout, and I didn't draw this just now. I drew this back like the end of July, something like that, somewhere around here. Symmetrical triangle. When you're in an upswing, a symmetrical triangle signifies a continuation of the trend 80% of the time. So it's a symmetrical triangle. So not only is it a symmetrical triangle, so not only is it a chart pattern, but it's also a trend. So, here's what you do, right? You short, you long, you short, you long, and then you break out and you win it. And how did I get this measured move that I called to the T? Well, the length of the symmetrical triangle right there. Boom. There you go. I don't know how much more perfectly it can be summed up and explained than that. And I see patterns everywhere, right? I mean, shoulder, head, shoulder, blast it off to the top side. Let's take our measured move from the bottom to the top, to the breakout. Got about 80% of the way there. That's a win. What else do we got? So here we go. This is a big one on Caspa. So this was kind of double top territory, right? So this is where you should have been probably cautious. Double top. We knew, first of all, the momentum was there. Not only is it double top, but this was a double bottom, right? Or even this could be considered a double bottom. So we knew that the momentum was there for Caspa for lots of reasons too. But we blasted through it. I mean, Caspa's in price discovery territory now. You can't TA it, right? Unless we fall back underneath this kind of the top here, then we can start talking bearish levels again. But this brings me to another point, is if your coin's in price discovery territory, either to the downside, like Hex recently, or Pulse Chain recently, or Algorand recently, or Caspa right now discovering new price, it's tough to TA. This is where you start looking for trends again. This is where you start looking for flags again, for patterns to help you anticipate where future price movement might be. Because we don't have anything historical, because this is all-time high for Caspa. So if Caspa can hold on, I mean, this could technically be considered a flag, right? And this is the 4-hour chart. So, I mean, or a pennant even, probably more of a pennant, or symmetrical triangle, same thing, synonym, right? Do we take the impulse or the measured move from all the way down here? Probably, I would. That was the breakout. Are we looking at a 0.0562 Caspa? It's potential. If we get 50% of the way there and start making another pattern, great. If not, and we start falling back down, which is a potential too right now, because we're in discovery territory, then we'll start looking at it from a bearish standpoint again. But again, like I said, you don't really want us to long, right? Because we don't know where it's going to go. You don't want a long resistance. You got to be patient and wait for it to start forming other stuff as well. You should have, what you should have done is listen to me 10 months ago when I made a video on Caspa and it was worth nothing, and now it's up 3,000%. I see patterns everywhere, guys. So double top, drop, came up again, top, dropped, double top, fell out. I mean, it's just, you start seeing this stuff everywhere. Double bottom, shoot to the top side there, kind of a double top there, drop to the bottom side there. And pretty soon you can just start looking at the chart and you can see like, hey, I mean, obviously we got hung up here for a while. That's probably a good spot to drop a trend line to tell yourself, hey, if we lose this, we're coming down. That's an important support level to hold. Previous resistance, it looks like. So pretty soon you'll start seeing this stuff. You'll start being able to kind of like here, that was a good level, right? Even previously, like going back, you can just see how this stuff starts psychologically like becoming support and resistance, not even based off of liquidity. There's psychological support and resistance levels as well. Atom, I'm just flipping through a few alts here just to kind of show you shoulder, head, shoulder, drop down. You just start seeing these things. You can use this same trend, same pattern recognition, same trend lines on indexes and indices too. So this is the total 3 market cap. So this is your altcoin market cap here. So we know we've been in a long descending wedge for a long time. I mean, we've been in this since November of 2021, right? And it's just been down since for alts. Alts have been bleeding, and they've been bleeding into Bitcoin because Bitcoin dominance is up. When this starts to break out, and it's going to, you know, it has to, right? Otherwise, crypto's dead and done and dead. And when this starts breaking out like it did, but it did off of news, off of that XRP win, and it's been retracing since. We're probably going to come back into this channel. But when this starts reclaiming some of these support and resistance levels, which you can just see, like, see how they've been previous support and resistance, right? You can see where this was previous support. We lost it. It's now resistance, right? You can see where this was. You can see where this was. Boom, 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 boom. Down here, boom, 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 boom. So you can just start, your eyes will just start picking up on this stuff eventually. I know it's going to be tough at first, but stick with it, practice, draw them out, make sure you're flipping through different time frames. Don't get hung up and stuck. Don't tunnel vision on a single time frame. Just flip into mask to show you guys to flip through different time frames, but daily time frame on mask, I mean, I don't know how much more of a perfect descending wedge you can get for that to blast it off to the top side. But what I want to show you here is, I mean, here's the daily time frame, weekly time frame, right? 30-minute time frame. They look different. So you can find patterns on the different time frames. You can find a shoulder, head, and shoulders. Now, the smaller time frame you go, those are considered scalps, right? So you don't typically want to hold those positions long term, because the larger time frame moves are going to be the bigger moves. So you kind of want to get in and out of those positions, hold them as long as you obviously can while moving your stop loss up, but you need to chart. So when I sit down in the morning to chart, I'm starting at the month, I'm going to the 2 week, the week, I'm checking out like the 3-day, 2-day, the daily, I'm going to like the 12-hour, the 4-hour, and working my way down, just so I have an overall understanding of larger time frames and then smaller time frames. Flip around. I'm telling you, flip around. If you don't see something on the hour, flip to the 4-hour. If you don't see something on the 4-hour, flip to the 7-minute, the 3-minute. You can flip around. When you're charting alts, don't ever forget Bitcoin is the papa. The market does 99.9% of the time what Bitcoin does. Sure, there's a few one-offs here and there. I'm not here to talk about, you know, the one-offs. I'm here to talk about generally how the market works. You have to chart Bitcoin first. If you enter into a trade on an altcoin and you don't understand fully what Bitcoin is going to do, or the trend Bitcoin is in, or where Bitcoin is inside of that trend, you're doing it wrong. For example, you just charted near protocol and you think to yourself, boy, this sucker is going to go down. Everything's telling me this is going to go down. And then you look at Bitcoin, and Bitcoin just smashed 28,500 and is going to bounce to the top side, bringing the entire market with them. You're going to get stomped out of that trade. So you need to chart Bitcoin first. When you take an entry on an alt, Bitcoin needs to be your number one indicator for entries. Where Bitcoin is in relation to the trend, to the pattern, to the liquidity, is where you take an entry into an alt. So if Bitcoin just smashed 28,500, I would probably wait for an entry on that alt. It'll still come down. If all the charts and everything's telling you it's going to come down, it'll come down, but it's going to get a temporary bump with Bitcoin. So you're going to enter when that kind of fizzles out, when that trend gets exhausted with Bitcoin, you know, that initial pump off that liquidity, it's going to happen, right? Because these are buy orders, these are sell orders. You know, when you come down here and smash this 28,500 below us, those are going to trigger buy orders. You're going to get a bounce to the top side, which is going to bring alts up with it. So if you entered there on an alt, you're going to get stomped out. So you need to be aware. My point is, you need to TA Bitcoin first, period. You can see how this can work with anything. I can pull up gold, silver, got the NASDAQ here. You can see kind of a double top forming on the NASDAQ. And you can see how we got kind of that double bottom on the NASDAQ as well, right? I mean, look at that W. I mean, that is just a beautiful how that played out. So now we're faced with the reality, is the NASDAQ double topping? Are we going to come back down? That is reality there. You can find other things here. I mean, you can a little bit of a double top, a little bit of an M pattern there, M pattern there. You know, what else do we got? I mean, we can find kind of a shoulder, head, shoulder there a little bit. So my point is, it works everywhere. I mean, TA is universal. Not only that, but I mean, I saw a cup and a handle on the NASDAQ. Whoops, get my brush here. I mean, there's your cup. There was your handle. You take your measure move breakout. Boom. So remember, just a quick recap before we take a quick look at candles, and I'm just going to kind of end the video there. You know, trends, you want to have as many points touch as you can. Then you trade the trends. You short resistance, you long support, and eventually you're going to be on the winning side of that trade. You know, you can scalp in between there if you're on larger time frames, which typically you're going to have these plays for days. When you're in a larger trend like this is a 30% trend, guys. I mean, if we go to the daily chart, you could be in this play for days or weeks at a time sometimes. So that's why you got to have a liberal stop loss. On top of that, you can scalp while still holding on to your larger plays, which I do. I'm in larger. When I say I'm in larger plays, I don't necessarily mean dollar wise. I mean time frame wise. So I'm in longer time frame plays. I'm shorting Bitcoin from 31,500. I'm shorting BNB from the top, CRV. I'm shorting a lot of coins right now since that 31,500 top. On top of that, I'm getting some scalps in there as well by drilling down into smaller time frame plays, finding patterns, right? There's your double top. Maybe I would look elsewhere. I'm not going to just use a pattern to enter, but I'm going to identify patterns and then try to find an entry, try to find confluence. I'm never just going to see two bottoms and enter into a trade is my point here. So I'm never just going to be like, oh, double bottom, enter into a long. I'm going to say double bottom. It's going to raise a flag in my head, a mental note saying, look into this further. Then you turn on all your indicators, right? Control Alt H, you know, pull up everything, right? And then you kind of dissect it. You look into the liquidity, you look into the other stuff, you find an entry. If you're confident in it, then you take that position. So I'm just going to quickly touch on candlestick patterns before I just do a quick wrap up of the video. This is probably way less important. Individual candlestick patterns are probably way less important, just from my own personal experience in the way I trade. I'm sure someone disagrees with me, and that's fine, but you should still be aware of these. I'm not going to go through all these. I mean, we're already on 42 minutes here. If you're at this point, 42 minutes, let me know down below, because you're here to be a winner, and you are going to be a winner, and you want to trade. A lot of these people out here probably already ended the video, and that's fine. I'm not everyone's flavor, but also this stuff is this stuff is dry. I get it. It's not exciting, but you need to know it and you need to learn it. And those of you that are still here, congratulations. I mean, you're on your way. You're starting. You're on your way to become a better trader, and that's awesome. Most people want money to fall in their lap, and that is not how life works. So bearish spinning tops, gravestone doji, shooting star, bearish, inverted hammer, hammer, bullish. You know, bearish and bullish engulfing are probably the biggest ones that you want to be aware of. Bullish engulfing, so you had a red candle, it completely engulfed the next candle, completely engulfed it. That's a bullish engulfing. Bearish engulfing is like, let's say for example, you have a green day and the next day it just engulfs that whole candle. That's a bearish sign. And starting the year in January was a bearish engulfing candle for like 2 freaking months, right? I mean, just completely engulfed the 2 previous month candles. That was a bullish sign. I mean, we were thankful, right? You can go to like the daily chart here, and you can see that we had a bearish engulfing candle here from Tuesday to Wednesday, the 1st to the 2nd, and then it's just been like a chop sideways since. Here we had that kind of flicker up to the top of the market here on the 23rd of July, bearish engulfing the 2nd, which typically signifies a bearish downturn, which boom, bearish downturn in the market. Like I said, I use these on higher time frames just to kind of get an idea of where the market's headed. You have bullish spinning tops, bearish spinning tops. So if we go to monthly here, I know there was, yes. So this is a bullish spinning top right here, bullish spinning top. So when it's a green candle and it looks like a top or a dreidel or whatever you call it, right? The little things you spin on a desk and it's green, that is typically a bullish spinning top. And in this case, the next month was bullish. That's all I'm going to talk to you about candles. It's up to you to Google it. Google candle pattern cheat sheets, and there'll be a million of them. Bookmark them, throw them in a folder on your bookmark bar like I showed you earlier in the video, and just use it to reference. Throw them on your desktop, whatever you got to do. Keep it nice, neat, and organized, man. and just glance at it occasionally, you know, learn it maybe. But it's less important than everything else that I'm talking about. Still important. You still want to know it, be aware of, because maybe you'll notice something here that you don't notice on a chart. Just a quick wrap up of the video for you guys. So first of all, smash that thumbs up button. You guys made it. You're on the way to becoming better traders. Turn on notifications. Hop in Discord, discord.gg. You can't even see it on that screen, so let me change my screen. Discord.gg/Alpha Aere. I am going to redo the Class TA section to be more like a forum in Discord. It's a new feature that they added. I'm going to test it out. I'm going to drop a lot of this stuff, a lot of these patterns, candlesticks, everything I'm talking about here in Discord, just for reference for everyone, and make it kind of nice and neat and organized, which you're able to do now, which is great. But I hope you learned something. You took something. I know this was a long video. You're probably going to have to watch it a few times or watch it halfway through, come back to it. I get it. I understand. But there's a lot that we covered in this video, and a lot where I'm turning the keys over to you to practice, to identify. It's going to take some time. It's going to take some work. You're not going to get all this overnight. Trust me, I didn't. No trader, you know, unless you're like an idiot savant, or is it not idiot is savant? Whatever. Unless you're Rain Man, you're not going to get this shit overnight. Unless you're a beautiful mind, you're not going to get this overnight, right? So practice, chip away at it a little bit each day. You don't need to spend hours staring at a screen. You do need to spend more than 10-15 minutes, but set aside a little bit of time each night or every other night as you can. Put as much effort into this as you can, and practice. And that's it. I'm ending it there. This video is 45 minutes long. So hop in Discord if you have any questions, or drop them down below. I'll try to answer as many as I can in the comments. Otherwise, hop in Discord. We have a TA channel where you can ask any questions. I'll be more than happy to clarify, specify, help you with anything I can. We are doing a Sunday night for now. You know, if I can get some people in there, kind of Discord. We're gonna hop in a voice chat. I'm gonna try to help people. We can do some screen shares so I can see your screen, ask some questions, things like that. Kind of a one-on-one or 1-on-10, or how many people show up every Sunday night. Appreciate you guys. That's it. I'm rambling. We'll see you guys later.